Hello. Let me just check that this is working. Put this down here. Hey guys, so I just wanted. Let's see. Give me 1 second, guys. Let's see. Give me 1 second, guys. Okay, it's working. All right. Yeah, just wanted to do a quick stream. Hopefully everything goes okay. Just wanted to do it now that we have CPI data out, and wanted to quickly give my thoughts about the crazy reaction that we've seen with CPI data, right? So I'm looking at the 15-minute chart here right now. Let me just close the volume data. And yeah, it's whoa, that was a crazy jump up. And if you guys watched my video previously on what I was expecting for the CPI data release, needless to say, it's kind of gone against the theory, right? The economic theory of what should be happening for a situation like this. But it's really interesting to see this. This is why, again, I never trade the news, because sometimes even though the data goes out and it comes out, even higher than expected in favor of the dollar in theory, but sometimes it just doesn't work out like that. So I'm going to quickly give my thoughts on why this potentially is happening and what we can potentially look at now in terms of trades. Okay. So if we want to quickly look at what the actual data was, in case you are interested or aren't aware. So we had a bunch of big data come out, um, particularly around inflation and fucking pop up. And as you can see here, this core CPI month to month came out at 0.7%, so 0.3% higher than what was the forecast, right? Which is wild. The year on year for core CPI is up at 0.4% above the expectation, and now we're seeing a 5% CPI, overall CPI year on year, which is really, really wild to see. And it just shows you, like, man, prices of things are just really going up. Um, Definitely the stimulus and everything that the government has been doing has definitely been having an effect on price. That's for sure. But as I said in the previous video before, and as you can see from the green here that's being outlined, typically this sign of strong inflation is a sign that, or it's actually typically bullish for the dollar. And the reason that it's typically bullish for the dollar is because when inflation goes up, it typically signifies to investors that the Fed will be looking to increase interest rates. When there's an increase in interest rates, of course, it typically leads to a, it leads to basically gold price becoming bearish, just because with increase in interest rates, people will start moving their dollars into assets or investment vehicles, which will allow them to gain interest on their dollar, right? People from foreign countries will start wanting to buy the dollar, and basically leads to a bullish dollar and consequently a bearish gold price. Okay. But as you can see here, what the price action that we actually ended up seeing, we got a situation where, yes, initially we got that drop, right? Almost, I think, probably an expectation like, okay, the data came out and it's negative, and we got this huge drop back to the support level of 1870, right? This kind of support range that we've been eyeing for a while, right? That's clearly now become quite strong support for gold, right? And sorry, guys. And off this position, let me take some water. Oh, that's better. So off that support range, we got such a crazy bounce up to the upside a situation. And if we look at the DXY, okay, now we're seeing some sort of reversal on the DXY. This could be a result of the actual US market opening now. So that's going to be something interesting to monitor. But on the DXY, we even got this initial huge dump to the downside, right? Which is really, really surprising to see, you know. Yields, yes, they did have a rise up, but they didn't rise that like to that crazy of an amount, you know? And it just begs the question more than anything, right? As gold investors, as gold traders, we want to understand like why is price doing this? Like why is price reacting like this? And it goes back to also the second thing that I said in the video about CPI, which is that if we learned anything from last month, right? Originally, for the first few days, investors were pretty bearish as a result of the CPI data. They were bearish on gold, and we saw a pretty strong correction on the price of gold. However, the Fed didn't raise interest rates, right? The Fed did not raise interest rates. And if they're not going to raise interest rates then, and they still have been pushing this narrative that they have no intention of raising interest rates, that this inflation isn't real but only transitory, then it's this inflation is obviously very bearish then for the dollar because it just means that there's going to be way more supply of dollar, right? With inflation, your 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 uh your dollars basically aren't nearly as valuable. So why hold any dollar at that point? And now clearly we're seeing maybe a reaction to that, right? Maybe people are betting on the fact that okay, yes, yes, we have inflation, but the Fed's not going to do anything about it. So what can we really expect? Now with the reason I wanted to do the stream now, oh, hey, buddy. The reason that I wanted to do the stream now is because sometimes with this data, though, when it originally comes out, it normally comes out like an hour before the U.S. opens. But now the U.S. is about to officially open in 3 minutes, so it's going to be really interesting to see. Right now, we're already starting to see potentially a bearish candle forming here on the 15-minute. The DXY is rebounding here. So maybe now the US investors that are now seeing this data are going to start being more you know, bearish on gold, etc. And maybe this was just kind of like a fake out. I actually need to close a position because yeah, we're starting to see that kind of volume. Let me just give me a second. Yeah. Okay. But so yeah, now we're actually potentially seeing a reaction from the U.S. and the U.S. market now opening that okay, maybe we are actually needing to go a bit in the right direction. But let's see how it goes. Okay. Um, I think it's really important with these types of when this type of data comes out, it's really important as well just to take a minute, let the U.S. open at least for 15 or 20 minutes and just see how the market is genuinely going to react. Because as you can see, more than anything, we're seeing some obscene volatility right now. And there's clearly a mixed sentiment in the market where there's a mixture of, hey, we have crazy inflation, but we don't think that the Fed is going to increase interest rates. Then there's some people who are just like, well, obviously, this is bullish for gold, for the dollar, so bearish for gold. So I would just highly recommend not um, not jumping out or just doing anything extremely rash, but just make sure that you're um, just see where the market is going first. Let the market kind of decide which kind of direction it wants to take um, based on price. And then from there, we can actually start looking into some positions. So for example, if this candle actually still closes above the 15-minute day and we don't see too much more downside here, potentially we could start looking at potential buy opportunities around this 1880 support level or the 1870 support level if we get back down there. It's going to be really interesting to see, though, over the next 15 minutes or so, how the market is going to continue to react to this data. But those are the kind of two levels that I'm really eyeing out for a buy position in terms of gold. I as I've said in my videos before, I'm still definitely bullish on gold in the longer term, and I still do believe ultimately that even with this data, with the Fed meeting coming out in on June 16th, they're not going to raise interest rates. If that's really the case, then 1900 eventually, even though it's been again proving to be very strong support, resistance throughout the last few weeks, um, I think we're going to break through that absolutely no problem. So let's just see how it's going to react, how everything is going to go, and then start looking to potentially build positions at this 1880 level or even at this 1870 level. All right, guys. Anyway, that's the quick stream. I got to go do some other stuff. So I'll talk to you guys later.